Welcome to Dollars and Cents, Creating Your Fulfilled Life with Nicole Romito from Private Vista. In this podcast, we draw from years of experience as well as guest specialists to help you create the life you imagine. Join us in this journey as we enlighten and empower you to align your lifestyle to help you achieve your goals with a clear picture of your future. Now, let's get to the show.
Welcome to the Dollars and Cents podcast with Nicole Romito. Nicole, it is so good to see you. How are you, my friend?
I am doing fabulous, Bill. It's good to see you as well. How are things treating you?
They're good. We're getting into spring.
Yes.
Things feel better. The weather's getting warmer. I like what lies ahead in warmer weather. How about you?
Oh, I love it. The spring flowers are my favorite. They're so happy. The daffodils
Yes, they
and
are.
the tulips. Yeah. I just love seeing them everywhere.
And I like seeing the blossoms on the trees too. I love seeing all of the pears and the cherries and all the different blossoms that are all around me right now, and it makes me happy as well.
Well, that is good.
So what are we talking about today?
Yeah, well, I think this will continue with both of us feeling happy because in studio with me today, I have Kenneth Ashford. So hi, Kenneth. Welcome to the podcast.
Good afternoon, Nicole. Thank you.
Oh, you're welcome. And what Kenneth and I are going to be discussing is really, we're going to talk about all things credit today. And in particular, focusing on for those listeners who might just be starting out to build their credit. So talking about what does that even mean? How do you go about building it? Why should you even care about your credit? So I think it's going to be really educational. And Bill, I think you and I, as usual, will probably pick up a thing or two because I know sure. Even though I've been in this industry for over 30 years, one thing that I think continues to change is credit and what matters for your score and how it counts and things like that.
Oh, no. And I do recall very well, even though it was a couple of years ago, the first time I incurred this idea of credit and credit rating, and I didn't understand what any of it meant. And I actually had to ask a friend whose dad was an accountant, what does all of this mean anyway? So, yeah.
Yeah, you're not alone.
No.
So before we get into that topic, because we will have a lot of information to pack into this episode, I want to introduce Kenneth and give our listeners a little bit of background on him. So as I mentioned, in studio with me is Kenneth Ashford, and he is an employee of Wintrust Bank. And in his current role, he's a relationship banker and officer. However, he has quite the extensive background in customer service. He's been doing those type of roles for over 40 years. And he's also a resident of the North Lawndale neighborhood of Chicago and has been doing that for over 60 years. So I think he might know a trick or two or a thing or two to help our listeners out about credit. So Kenneth, before we get into the topic, would you maybe want to share just a few things that you enjoy on your personal time when you're not helping your customers at the bank?
Well, sure. I'm a passionate cook. At one point, I had my own catering service, and that spent some time, but now I just cook for family and friends. I'm not charging anyone anything lately, but yes, I'm a passionate cook. I'm a choir director at my church, and I love gospel music.
Wow. Well, it sounds like you definitely have both sides of your brain well developed there, being in banking for the left side and then singing and cooking on the right side. So kudos to you for being a well-rounded person.
Yeah, there's a balance there, correct.
It sure sounds like it. Well, great. Well, thanks for sharing a little bit about yourself with me and our listeners. Why don't we kind of just jump into the topic at hand and we're going to talk about credit for those who, don't know or just getting started. What is credit? How do you define it?
Well, let me just back up a few steps. I just want to thank you for this opportunity. I'm so proud to be here today representing Wintrust. We are Chicago's bank, and we believe some financial education is a priority for people of all ages and all the communities we serve. Wintrust bankers, tellers, loan officers, and other employee devoted 3,000 plus hours and reached 16,000 plus people through education sessions and other forms of financial instructions. One course we offer, Understanding and Effectively Using Credit, is part of our core FDIC Money Smart curriculum. And we believe educating yourself is the first step to maintaining a positive relationship with credit.
I'm with you. I think knowledge is power. I know that's an old after school special call to action, but I couldn't agree with you more. So thanks for certainly sharing how committed you and your fellow employees at Wintrust are to educating and helping the communities. That's amazing.
Perfect. So to answer your question, what is credit? Credit is the concept of receiving something of value now with the promise to repay it in the future. Lenders like banks and credit unions extend credit to consumers through tools like credit cards and loans for homes, automobiles, and higher education and more. Credit makes it easier for you to have access to loans when you need it in the future.
Yes. All right. Well, that is good. Now that we kind of know how we're defining credit for today, I know we're going to get into the different types of debt that you can take on and how those could positively or negatively impact your credit score. Why don't we get into like, how do you find out what your credit score is, or how does someone determine if I'm a good credit risk or not when I'm applying for a loan?
Okay, so there are credit reports that are available. A credit report is a detailed list of your financial information. It includes your bill payment history, loans, and debt. It shows where you work, live, and where you've been, if you've been sued, arrested, or filed for bankruptcy. Your credit report helps the lender decide if you are high or low risk.
How can one obtain their credit report?
Sure, they can visit sites. There's different credit systems out there, and we have the FICO score, the Vantage score, and these both range from 300 points to 850 points. Higher is better. Everyone realized that. And when they have a higher credit score, most likely creditors will lend to you. A good rule of thumb is most lenders consider anything above 670 a good score.
Okay. And I would believe it's safe to assume that the higher the score you have, that could impact maybe getting a lower or better interest rate, or maybe more attractive terms on your loan.
That is correct.
Okay, great. And I do believe too, just to add on to what you were saying about that there is more than one credit bureau. I know one thing I'll share with clients is if they want to get their reports, that once a year you can go to annualcreditreport.org, and that'll allow you to get a free copy of your report from each of the three major bureaus once a year.
That is correct. Absolutely. I was about to bring that up, but you took the words right out of my mouth. Thank you
Oh
so
my
much.
gosh, I apologize for stealing your thunder.
That's okay.
So, but I do believe, and maybe you want to share, that does not include your credit score typically, right? It'll have your credit history.
Correct. If you want to determine what your credit score is, it's a number based on information in credit reports indicating your credit worthiness. In other words, it's how likely are you to pay bills and debts as agreed. Think of your credit score as your financial reputation. So therefore, you want to protect that, right?
Absolutely.
Yeah. People with higher credit score are likely to present lower risk to creditors. Your credit score is one of the most influential factors in determining your eligibility to rent an apartment, take out student loans, and purchase a car or home.
Yeah, and I think I do want to just emphasize one piece of what you just shared, is because there are people out there who, they don't believe in debt. They wait, they save up to pay for cash for whatever purchase they're working towards. But even if you want to buy your car, or if possible your home for cash or things like that, I do want to highlight that, what Kenneth just shared, it can go into if you're renting an apartment. I know many employers will pull your credit score as part of the application process. And then even sometimes I know if you're like applying for a cell phone and such, right?
Correct. Other financial institutions, utility companies, insurance company in some states, and maybe your employer.
Yeah, exactly. And I don't know about you, but gosh, my homeowners and car insurance have steadily been increasing. And it's not because I've been making claims on it, but also for my listeners, it's not because my credit score is going down. I do want to note that.
Yes.
But you're right. I mean, those rates are going up kind of just in general, and then it could be exacerbated or multiplied if your credit score has gone down during that period. So that
That's
could
true.
right? And then that could
So
even
true.
have a bigger impact on that credit score overall.
Absolutely.
So why don't we've talked a little bit about where you can get your report, kind of what the different types of scores and the range, why you should be aware of your score. What are some things that go into your credit score? So you mentioned some of them high level. Do we maybe want to go into a little more detail on, so in case people aren't familiar with the terms?
Sure. So if you have FICO or Vintage evaluating individual credit score, what they look at is your payment histories. Have you been making payments on time and in full? Your credit usage, total amount you owe, plus how much your available credit are and what you're using. The length of your credit history, your oldest accounts, newest accounts, and average age of the account. The type of credit that you have, such as your credit cards, your retail accounts, your mortgage, your loans.
Hey, pardon the interruption. I know you are listening to Dollars and Cents, Creating Your Fulfilled Life with Nicole Romito, and we're happy you're here. If you have any questions, please head over to myprivatevista.com or the show notes to find out how to reach us. We'd love to hear from you.
I don't know about you, but I try to put everything possible on my credit card to get the airline miles, but then I pay it off in full every month, right? I
Yes,
think
yes.
that's using credit in a smart way. At least personally, that's what I think. Is that a good habit or a bad habit?
No, I would think that's a good habit because it's different. They look at different areas. Your new credit, they review that's 10% of your whole model.
Okay.
The length of the credit history is about 15% that they look at. Your payment history makes up about 35%, and what you owe is about 30%.
Okay. So
So
it
these are
sounds okay.
factors of your whole FICA model.
Yeah. So I think if to summarize that, it's saying those are the components that would go in and the weighting of like the impact that they have on your score when the FICO model is computing that.
Absolutely determine your score, correct.
Okay. So then just to reiterate with those big components, the most important is the payment history, which makes up a little over a third or 35% of that score.
That is correct.
Okay. And that ties into paying on time, and please confirm this, whether you pay the minimum amount due or pay it off in full.
On time and in full, correct.
Okay. And how does it, if you pay on time, but you only pay the minimum required amount, will that hurt your history potentially?
I don't believe it will.
Okay.
Because you're making your payments on time.
On time. Okay.
Mhm.
So timely payments are key. And I think just to our listeners, if you do pay late, there are late payment fees after a grace period, and then interest usually starts to accrue as well. And I know we're going to talk about how the interest rate works on the cards a little bit later in this episode. But just always as a reminder, I mean, you want to keep your credit score high, but paying late will, you get dinged financially, and it could be a couple different ways.
Correct.
Okay. And then with the new credit, does that mean like when you're applying for new credit cards or new loans and whatnot?
That is correct, yes.
Okay. So that has a smaller impact. And then the next biggest one would be the amounts you owe, or I know in the industry, the term is utilization. Well, now that our listeners know a little bit about kind of how their credit score is calculated, why it's important, where they can go to get reports to make sure that all their information is accurate, why don't you share some tips with our listeners on how people, if maybe they're in a position where they're trying to improve their credit score?
Sure. Five things that pop out in my mind is paying your bill on time as agreed. A positive payment history is the most influential category in both scoring models on your FICA and your Advantage reports. Working on paying off your debt, that'll be second. Decreasing the amount you owe increases available credit, shows lenders you can manage your debt. 3, keep credit card balances low to avoid appearing overextended and make you credit wise. 4, keep older credit cards accounts open to enhance your credit worthiness. And the 5th one would be monitor your credit. Check your credit reports at least once a year to ensure there are no errors or fraudulent activity present.
Great. Those are wonderful tips. And I think too, with the last tip, you said to regularly monitor your credit, probably also for our listeners to consider, is your credit score can and will change throughout, not only throughout time, but even through a short period of over a year. And I think based on the tips you just shared, Kenneth, that might give them some insights of why, because depending on if you had just paid off your balance or maybe made a big payment, or maybe you had a big vacation or put some home improvements on it, there could be temporary changes in your balance. And depending on when your report is getting pulled, that could impact your score.
Absolutely.
So we covered some tips. What about, do you want to talk about, I kind of feel like with all things in life, we talked a little bit of just right now, what make your score go up or down with, kind of your point in time balances. Is there anything else you want to add on that could maybe make for a short term, if you will, fluctuation in your credit score moving?
Well, I want to say carrying high balances on credit cards compared to available credit limits can significantly reduce a credit score. Yeah.
Okay, that's good to know.
As some people, they advise using no more than 30% of your available credit, while others advise using no more than 20%, while keeping balances at or below those percentages may be a goal that you cannot reach right now. It helps to use as little of your credit limit as possible.
Okay. And I think though, just by, even if you're using as little as possible, you're still building a good history as long as you're paying on time. So you're borrowing a little bit, you're paying it on time. That still helps you establish a good credit history.
Correct.
Perfect. What about for those people who prefer to pay cash for everything? How would you, any advice or tips for them? Because as we mentioned, it does go into possible if you're going to rent an apartment, employers may pull it, your car or home insurance. So you still need a credit score. You still need a credit score, even if you're not going to borrow to pay something later.
Sure. I'm glad you brought that up. I have a perfect example for you. I had a customer, Miss Smith, who was convinced that credit reports did not matter to her. She did not plan to get a credit card or any kind of loan. She used cash for everything, right? Miss Smith,
Right. Yeah, exactly.
yeah,
This is exactly the person I was thinking of.
yeah, recently moved and needed to find an apartment. Some landlords would not rent to her because she had no credit history. Even if she promised to pay her rent each month in cash, when she found an apartment she liked and a willing landlord, she had to pay a higher security deposit because she did not have a credit history. She also had to pay a deposit for her utility because she had no credit history. So she decided to find out more about credit reports and why have no credit history seemed to create some obstacles. So we've helped her significantly with this.
Oh, that's good to know. So we're certainly not saying run out and get a lot of credit and run up balances, but Really, this is why one of the big reasons we wanted to feature this in one of our podcast episodes is you can still, if you will, predominantly pay cash, but you're going to want to have some type of credit history built up so that you're not being penalized for your choice to pay cash throughout life.
Correct.
Great. So why don't we wrap up here? If we want to maybe talk about some credit myths, like maybe myth versus reality, common ones that either you hear about or are kind of just still floating out there.
Sure. Yeah, I've heard people say that, can you pay someone quickly to improve your credit? But we know that it takes time to build or rebuild credit. So no, you can't pay anyone to get a better position and with your credit. Also, I've heard that a credit card has only one interest rate. A single credit card can have multiple interest rates. And lastly, I'm sorry, go ahead.
Oh, no, that's okay. I referenced that earlier in the episode because I knew you were going to bring this up. And I think this is an important one to kind of expand on a little bit. So when you say a single credit card can have multiple interest rates, can you expand on that a little for our listeners?
Yes, you may have some cards out here that carry a standard annual percentage rate, which is an APR. The cost of your credit expressed as a yearly rate. There are also cards out there with the penalty APR and some that have a higher interest rate. These may lean towards a cash advance.
Okay, thank you. So just to reiterate for our listeners, if you pay off the full balance that's due on time, then there's no interest. You in effect have gotten an interest-free loan from the credit card issuer. If you pay late, as we mentioned, after a grace period, there's a late fee, but then also you start accruing interest on that unpaid balance. And then there could be also, if you do a cash advance, that is charged at a different interest rate than if you just use your card at Starbucks or Nordstrom's or whatnot. It is important to be aware, and I will say, listeners, and certainly I know Kenneth's not responsible for this, but that is all in that very small fine print that many of us skip over when we're looking into our credit. So be
true.
right. Yeah. So be aware if you do get into a position where either you're taking a cash advance or you can't pay the full balance off on time, you just want to understand what that interest cost is.
Correct.
So, all right. Well, I think you have shared a wealth of knowledge with our listeners today. So, before we start to wrap up, Kenneth, is there anything else that you wanted to make sure you covered or shared with our listeners today?
Well, like I said in the beginning, educating yourself is the first step to maintaining a positive relationship with credit. So I just thank you for having me here today. And at Wintrust, we are committed to helping people build knowledge, security, and confidence in their financial health.
Well, I can tell by all the knowledge that you shared today, which I know is only a small sliver of all the knowledge in your head, that your clients are in good hands and you're helping them build good habits by that. So I'm sure your clients are very appreciative of having you on their team.
I hope so.
So now that we've wrapped up, there is a question that I ask all my guests. And so I can't wait to hear your answer. But if you could live anywhere in the world and there were no like time constraints or financial constraints, or, you had to be here in the Chicagoland area, where would you most like to live and why?
Well, once I retire, which would probably be in about 7 years,
Okay.
I plan to stay in Chicago because I have people all over the world that I plan to visit. So Chicago is my hometown and I love Chicago. But I also like to visit other people, but I don't want to stay there.
Oh, well, there you go. You can have the best of both worlds. I love
Yes.
it. Thank you for sharing, Kenneth.
You're welcome.
All right, Nicole, thank you for bringing us that conversation. But before we really wrap this episode up, I need to ask you a quick question in terms of if people want to have a conversation with you, how do they get a hold of you?
Yes, if people want to reach me, they can do it one of two ways. They can go to our website at myprivatevista.com. We have a contact us button on the homepage. You can put in your information there. Please reference this episode, and I would be happy to have a conversation around it or answer any of your questions. Kenneth, did you want to share any contact info if our listeners want to get in touch with you or one of your colleagues at Wintrust?
Absolutely. They can reach me at kashford@wintrust.com.
Very good. And that'll go right to you, Kenneth?
Yes, it will.
Okay, super. So people know who they're communicating with. It would be you himself. Thanks so
Sure.
much for joining us today, Kenneth. I appreciate it. Nicole, as always, it's a pleasure being with you. For those of you who are listening to the podcast for the very first time, I would ask that you do something really simple. Reach out and hit the follow button. That way you will become a subscriber. And every time Nicole puts out a new episode of her podcast, you'll be notified and you can give it a listen. Until next time, I'm Bill Tucker. On behalf of everybody at My Private Vista and Nicole herself, I would like to thank you for taking the time to listen today and remind you to go out today and make today a great day. Thanks so much for listening. Until next time.
Thank you for listening to the Dollars and Cents Creating Your Fulfilled Life with Nicole Romito, sponsored by Private Vista. Visit our website at www.myprivatevista.com or give us a call at 312-831-4370. And don't forget to click the follow button to be notified when new episodes become available. Private Vista is a group comprised of investment professionals registered with Hightower Advisors, LLC, an SEC-registered investment advisor. Advisory services are offered through Hightower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is neither indicative nor a guarantee of future results. The investment opportunities referenced herein may not be suitable for all investors. All data or other information referenced herein is from sources believed to be reliable. Any opinions, news, research, analyses, prices, or other data or information contained in this presentation is provided as general market commentary and does not constitute investment advice. Private Vista and Hightower Advisors, LLC, or any of its affiliates make no representations or warranties expressed or implied as to the accuracy or completeness of the information or for statements or errors or omissions, or results obtained from the use of this information. Private Vista and Hightower Advisors, LLC assume no liability for action made or taken in reliance on or relating in any way to this information. The information is provided as of the date referenced. Such data and other information are subject to changes without notice. This was created for informational purposes only. The opinions expressed herein are solely those of the authors and do not represent those of Hightower Advisors, LLC, or any of its affiliates.